All right, let's talk about Aptiv. On February 2nd, they dropped their Q4 2025 numbers, and wow, the market's reaction was, well, it was a real head-scratcher. It told a fascinating story, but you really had to look beneath the surface to get it. So let's dig in. Okay, so here's the big puzzle we're trying to solve today. The stock, it gets hammered in the pre-market, down over 3% right when the numbers come out. But then by the end of the day, it completely flips, rallying to close up almost 3%, and on some really heavy volume too. So what on earth happened between the opening bell and the closing bell? What did the market hear on that earnings call that made them do a complete 180?
All right, so to figure that out, let's start at the beginning. We'll look at the surface level clues, the big headline numbers that the market saw first and reacted to.
So, looking at the numbers, what's really interesting is, well, what isn't here? There's no massive blowout beat. I mean, Aptiv put up a solid quarter, for sure. They edged out the consensus on both revenue and earnings per share. But look at the numbers. A 1-cent beat on EPS? That's modest. It's fine, but it's not the kind of thing that usually makes a stock take off. So right away, we know these numbers alone don't explain that big rally.
And hey, they also brought in a very healthy $818 million in cash from operations. That's a strong number, no doubt about it. A definite plus for the balance sheet. But again, as great as that is, it's just not the smoking gun. It wasn't the big catalyst for that crazy reversal we saw. The real story, as it turns out, was hiding in what they said about the future.
And this is where things get interesting. This is the pivot. The market quickly figured out that this earnings call wasn't really about the quarter that just ended. Nope, it was all about a much, much more compelling story for the year ahead.
Yeah, this right here really sums up that whole shift in thinking. You know how they say the market looks through the windshield, not the rearview mirror? That's exactly what happened here. The Q4 results, they were fine, but they were in the past, backward looking. The guidance for the full year 2026, though, that was strong. It was forward looking, and it was screaming momentum. And that's exactly where everyone's attention snapped to.
And here's the kicker. The guidance management gave for 2026 revenue and earnings, it was well ahead of what Wall Street had penciled in. Now you got to remember, the stock had a rough January because everyone was worried about auto demand slowing down. So when this strong outlook dropped, it was like a huge sigh of relief. It basically de-risked the whole story and signaled that, hey, the business is actually a lot healthier than people were afraid of.
But wait, there's more. The strong guidance was only part of the forward-looking story. The other massive piece of news is the plan to spin off their electrical distribution systems business. It's going to be a whole new publicly traded company called Versigent. And this isn't some small thing. It's a huge strategic move. The whole point is to simplify the business and unlock a ton of value.
And you can see the CEO's goal right here. The whole idea is to create two distinct, more focused companies. So after the split, you'll have what's left of Aptiv, which will be this higher margin, super tech-focused business all about software and intelligent systems. And then you'll have Versigent, which is more of a traditional but very large electrical systems company. And if there's one thing investors love, it's a clean, easy-to-understand story. This split gives them exactly that.
Now, look, a great story is one thing, but you've got to be able to execute on it, right? And that's where the Q&A part of the call comes in. This is where management really stepped up and earned some serious credibility with Wall Street.
So one of the first questions on everyone's mind was obviously the supply chain. Specifically, what about semiconductor costs? I mean, shortages and inflation have been a huge headache for the whole industry. So how is Aptiv handling it? Well, their answer was basically a masterclass in how to manage your business.
So get this, instead of just reacting to problems, it turns out they've been playing offense. They told investors they'd proactively built up something like 12 weeks of semiconductor inventory. Not only that, they locked in longer-term contracts to sidestep the crazy price spikes, and maybe most importantly, they sounded super confident that they could pass any higher costs straight through their customers. This just showed everyone they were totally in command of their supply chain, and it gave investors a huge boost of confidence that the company's profit margins were safe.
Okay, so let's put all the pieces of the puzzle together. You've got the solid quarter, the really strong guidance, this big spin-off catalyst, and a management team that just proved they know how to execute. So with all that in mind, here's our take on what to watch for next.
So for next quarter, we're expecting things to be pretty much in line with that new, stronger guidance they just gave. The real focus is going to shift to two things: margin execution and how that spin-off is coming along. In the near term, we think the stock is probably going to drift higher as we get closer to that Q2 spin-off date. As the event-driven investors start to pile in. The one thing to really watch for, the key catalyst, is any new details about Versigent's finances. That's the info the market needs to really figure out what these two new companies are worth.
So, putting it all together, our official rating on Aptiv is outperform.
And let me just quickly recap why. The bull case here is just really clear and compelling. First, that 2026 outlook is basically de-risked now. Second, you have a huge clear catalyst coming up with the Versigent spinoff. Third, that spin is going to create a simpler story, which should help the remaining Aptiv get a higher valuation for its software and safety business. And finally, management just proved they have the credibility to pull this whole thing off. It's a powerful combination.
So, in the end, the market figured it out. That intraday reversal happened because investors realized the real story wasn't about the small Q4 beat. It was about the powerful 1-2 punch of a strong outlook and a massive value-unlocking spinoff. And as always, remember, this is not financial advice.